Hello, I'm Jeff. Welcome to our first quarter 2026 market outlook. Whether you're a client or joining us for the first time, we hope you find value in the insights from our advisors at Capital Strategies Group. As certified financial planner practitioners, we take an unbiased fiduciary approach to the work we do. We are always keeping a close eye on market movements and staying well informed. That said, just because we are sharing our insights with you doesn't mean adjustments are warranted in your portfolio. News headlines can create a sense of urgency, but not every situation calls for immediate action or intervention. As we kick off 2026, we believe the economy and markets are settling into a steady rhythm, offering a rare sense of balance after several years of extremes. After high inflation, rapid rate hikes, and constant headline noise, the economy is no longer running too hot, but it's also not stalling out. The Federal Reserve's own projections point to slower, more sustainable growth, which historically has been a constructive backdrop for long-term investors. Inflation remains a key focus, but the story has changed. Prices are still higher than we'd like to see, but the pace of inflation has clearly cooled. The Fed's preferred measure, the core PCE inflation measure, has come down meaningfully from its peak. Economists at major banks like JP Morgan and Goldman Sachs have noted that inflation is no longer broad-based, but more concentrated in areas like housing and services. That shift suggests inflation is becoming more manageable, even if it settles a bit higher than the old 2% norm. Inflation matters because it changes how central banks act. We've moved away from emergency tightening toward a more flexible approach. Fed officials have been clear that future decisions will depend on the data, and markets continue to expect gradual rate cuts over time as inflation stabilizes. This shift alone has helped reduce uncertainty across markets. For stocks, 2026 looks less about dramatic moves and more about fundamentals. Valuations are elevated in spots, but earnings have held up better than expected. S&P 500 profits remain resilient, supported by strong balance sheets and productivity gains. History shows markets don't need perfection to move higher, just a stable environment and steady growth. On the bond side, yields appear closer to a plateau. After years of rising rates, bonds are once again providing meaningful income. High-quality bonds have re-entered the picture as portfolio stabilizers, and even parts of the high-yield market remain supported by healthier corporate balance sheets and below-average default rates, according to Moody's. One of the biggest long-term drivers continues to be artificial intelligence. The focus is shifting from hype to application. Companies are spending real dollars on automation, software, and infrastructure build-out. Companies continue to innovate, and new technologies open doors that simply didn't exist before, creating new products, new efficiencies, and entirely new ways to grow. As we've seen time and time again in history, productivity gains like these tend to support growth, profitability, and market returns over time. Globally, trade policy and geopolitics remain part of the backdrop. Last year, tariffs and political tensions created short-term volatility, but businesses have adapted by diversifying supply chains. Analysts still project steady global growth for 2026, and markets have refocused on earnings and innovation. When you step back, the message is steady, not spectacular, resilient, not fragile. The economy is adjusting, markets are normalizing, and long-term investors are often best served by discipline and patience in this kind of environment. As always, we're watching the data closely, so you don't have to react to every headline. The focus remains on keeping you well-positioned for what truly matters, not just what's loudest in the moment. We appreciate you taking time to join us for the first quarter economic and market outlook. If you aren't currently a client of Capital Strategies Group and would benefit from having an expert at the helm, helping you navigate this changing market landscape, we invite you to reach out to us. Take care, and thank you for watching.